It's always interesting how financial rules, the ones that really shape things for people, keep changing.
They certainly do. Constant evolution.
And today, we're diving into a really significant shift here in the UK tax system. Something that my tax accountant, the well-known firm, actually brought to our attention and helped arrange this chat.
Yes, it's a topic generating a lot of discussion right now.
Absolutely. We're talking about these new tax rules kicking in soon that mean non-domiciled individuals living here in the UK will have to pay UK tax on their foreign income.
That's the headline, yes. A major change from how things worked before.
It really is. So let's, get into the details. What was the old system like, just briefly?
Well, for years, if your permanent home, your sort of domicile, was considered outside the UK, even if you lived here.
Right.
You often had, let's say, different tax rules, especially for money earned abroad.
Right.
Before April 6, 2025, you might have used the remittance basis.
Domicile being like where you fundamentally belong long term, not just where you happen to be living.
Exactly. It's a complex concept.
Yeah.
But think of it as your ultimate permanent roots, if that wasn't the UK.
Then your foreign income, maybe foreign capital gains too, you wouldn't necessarily pay UK tax on them unless you brought the money here.
Precisely. As long as you kept it offshore, outside the UK, it generally wasn't taxed here, like two separate pots of money, tax-wise.
But that's the system that's changing dramatically, it sounds like.
Yes, dramatically is the right word.
Yeah.
From 6 April 2025, that remittance basis system is largely being abolished.
Okay.
The UK is moving to a system much more aligned with, well, where you actually live, your residence.
So the big takeaway is, if you live in the UK, your worldwide income and gains are probably going to be taxed in the UK, regardless of this domicile idea.
That's the core principle of the new system, yes. It brings the UK more in line with how many other countries operate, more based on residency.
Okay, so it's a fundamental shift. What are the sort of main pieces of this new puzzle we need to understand?
Well, the biggest piece, as we've said, is the end of that remittance basis for most people. That option to only pay tax on foreign income when you bring it to the UK. That's going away.
Right. Done. And what replaces it as the main test?
Simple in concept, really. UK tax residence. If you meet the test for being a UK resident.
Which I know can be complicated in itself, days counting and ties and things.
Exactly, that's a whole topic.
Yeah.
But if you are a UK resident, then your global income and gains are, in principle, subject to UK tax.
Okay. But I heard there's something new, maybe a transitional thing for people who are new to the UK.
Ah, yes. You're thinking of the 4-year foreign income and gains regime, the ECI regime, they're calling it.
FEG regime, okay. And that's for new arrivals?
Yes, it's kind of a potential relief, maybe an incentive for people moving to the UK who haven't been here recently.
So how do you qualify for this? What's the key?
Your recent history is crucial. You absolutely must have been non-UK resident for at least 10 consecutive tax years before you arrive in the UK.
10 full years outside the UK tax system. That's quite a strict requirement.
It is a clear 10-year break.
And if you meet that, what's the benefit?
It's quite significant. You get 100% relief from UK tax on your foreign income and gains. So anything earned or gains made outside the UK is not taxed here for your first 4 tax years of UK residence.
4 years. Okay, let's make that concrete. Someone moves here, say, July 2025, and they do meet that 10-year non-residence rule.
Right. So they become UK resident in the 2025-26 tax year. Their 4 years of relief would cover 25-26, 26-27, 27-28, and 28-29.
Meaning their foreign income wouldn't be taxed in the UK until April 2029.
Correct. Assuming they remain UK resident throughout that period, of course.
That's a pretty decent window for someone starting out here. But you mentioned it's strict. Is there a catch, something that trips people up?
There is, and it's vital. Even 1 tax year of UK residency within those previous 10 years.
Just one?
Just 1 year. And you're disqualified from this 4-year FIG regime completely. It has to be 10 consecutive non-resident years.
Wow. Okay, so it really is for people with no recent UK tax footprint. What about people already living here then? Maybe they've been non-doms for years, but they don't qualify for this new 4-year FIG thing because they haven't been away for 10 years. What happens to them?
Right, that's a large group of people. For existing UK residents who aren't eligible for the new 4-year regime, the rules change significantly from April 6, 2025.
How so?
They will become subject to UK tax on their new foreign income and gains arising after that date, just like any other UK resident.
So the protection of the old remittance basis on new income just stops?
Effectively, yes. For income and gains arising from 6 April 2025 onwards, it stops. They'll be taxed on a worldwide basis going forward. That will be a big adjustment for many.
I can imagine. Now, I also heard about something called a Temporary Repatriation Facility, TRF. What's that about?
Ah, the TRF. Yes, that's another important piece. It's a temporary window, basically, running for 2 tax years from April 2025, so 25-26 and 26-27. Sorry, it actually runs for 3 years, 25-26, 26-27, and 27-28.
Okay, a 3-year window. And who's it for?
It's specifically for individuals who have previously claimed the remittance basis. So people who have untaxed foreign income and gains built up before April 6th of 2025 sitting offshore.
Right, the money they earned under the old rules but didn't bring into the UK.
Exactly. The TRF offers them a chance to bring that money, those pre-April 2025 funds, into the UK at a reduced tax rate.
Reduced compared to what? What are the rates?
Well, compared to potentially paying income tax at up to 45%, under the TRF, for the first 2 tax years, 2025-26 and 2026-27, the rate is 12%.
12%. That's a big difference from 45%.
It certainly can be. And for the final year of the facility, 2027-28, the rate goes up slightly to 15%.
Still much lower than standard rates. So there's a real incentive to use this window if you have those old funds offshore and might want to use them in the UK eventually.
Absolutely. Because the key thing is, this facility is temporary. It ends after the 2027-28 tax year.
And after that, if you bring that old money in then.
After the TRF window closes, remitting that pre-April 2025 income or gains will likely mean paying tax at your normal UK income tax rates. Could be 20%, 40%, even 45%.
So using the TRF could lead to significant tax savings for people in that situation. A clear deadline to consider.
Definitely something for people who use the remittance basis to think about carefully with their advisors.
Okay, let's shift gears a bit. What about inheritance tax, IHT? Is that caught up in these changes too?
Yes, IHT is also undergoing a fundamental shift, again, moving away from the concept of domicile.
Really? So it's not about where your permanent home is deemed to be anymore for IHT?
Not primarily. The plan is to move towards a residence-based system for IHT as well. It's another big change for people with international assets.
So how will it work? What makes your worldwide assets liable for UK IHT now?
The new trigger is likely to be based on becoming a long-term resident. The consultation suggests this means being UK resident for at least 10 out of the previous 20 tax years.
10 out of 20 years. Okay.
Yeah.
And if you meet that,
Then your worldwide estate assets, anywhere in the world, not just the UK, would potentially be subject to UK inheritance tax upon your death.
that's a major expansion for some people. What if someone meets that 10-year threshold, becomes subject to worldwide IHT, and then leaves the UK? Do they escape it immediately?
Not necessarily. There's expected to be a tail provision.
A tail.
Yes, meaning you could remain within the scope of UK IHT on your worldwide assets for a certain period after you stop being UK resident. Maybe 3 years, maybe up to 10 years, depending on the final rules and how long you were resident previously.
So living the UK doesn't automatically switch off that worldwide IHT liability if you were a long-term resident. Interesting.
It means planning becomes even more crucial well before leaving the UK.
Right. Now, what about overseas workday relief? OWR, is that still around?
OWR is still available, yes, but it's now linked directly to that 4-year CAIG regime we talked about for new arrivals.
Ah, so you only get OWR if you qualify for the IFA regime.
That seems to be the intention, yes. If you're not eligible for the 4-year aid relief, you likely won't get OWR either.
And has OWR itself changed?
It has. The relief period is extended to match the AWAG regime, so potentially up to 4 years now. But there's a new cap.
A limit on the benefit.
Yes, a financial limit.
Yeah.
It's proposed to be the lower of £300,000 or 30% of your total employment income that can qualify for the relief relating to overseas workdays.
Okay. And didn't you used to have to keep the money earned offshore to get OWR?
You did, yes. That was tied to the old remittance basis system, but that requirement is gone now.
So it's simpler. You don't need separate bank accounts just for OWR purposes anymore.
Exactly. It should be much more straightforward to administer for those who qualify.
Makes sense. One last area, capital gains tax, CGT. Anything changing there, especially regarding assets held before all this kicks in?
Yes, there's a transitional measure for CGT. It's for people who use the remittance basis before these changes.
Okay.
They'll have an option to rebase the value of foreign assets they held personally on 5th April 2017.
Rebase. What does that mean practically?
It means for calculating any future capital gain, When they sell that asset, they can choose to use its market value as of 5th April 2017 as the starting cost, instead of the original price they actually paid for it, which might have been much lower and much earlier.
Ah, so if the asset went up a lot in value before April 2017, rebasing wipes out that part of the gain for UK tax purposes.
Precisely. It could potentially reduce the taxable gain quite significantly when the asset is eventually sold after April 2025. It only applies to gains arising after that date, though.
So that could be quite valuable relief for some people holding long-term foreign assets.
It could be, yes. Another thing to look into if you've used the remittance basis.
Okay, wow. So putting it all together, this really feels like a complete overhaul of how the UK taxes people with international connections.
It really is a fundamental shift away from domicile being the key factor for income tax and capital gains towards residency.
And for IHT, too, eventually.
And for IHT for long-term residents, yes. While you have things like the 4-year IFIG regime for new arrivals and the TRF and CGT rebasing as transitional points,
Right.
the clear direction is taxing UK residents on their worldwide income and gains. It's a major turning point.
It sounds incredibly complicated, though. I mean, the details for any one person must be quite specific to them.
Oh, absolutely. These are complex rules. How they impact someone depends entirely on their personal situation, their residency history, their assets, where income comes from, future plans, you name it.
So just listening to us isn't enough.
Definitely not.
Oh.
It gives you the overview, the heads up. But anyone who thinks they might be affected by these significant changes really must get personalized expert advice.
To understand exactly what it means for them and what steps they should take.
Exactly. To navigate their obligations and, explore any options available to them under the new rules.
And if people are looking for that kind of tailored expert guidance on navigating all this.
Well, given their deep understanding of UK tax, especially for individuals with international aspects, and seeing as they arrange this discussion for us today,
Right.
we'd certainly suggest that reaching out to the professionals at My Tax Account would be a very sensible step.
They're well placed to help people figure out how these new rules affect their specific circumstances.
Absolutely. They can provide that specific, tailored advice that's really essential with changes of this scale.